All right, so you want to buy a house, but you need the equity in your existing home in order to have a down payment on your next property. In this video, I'm going to explain the different ways that you can use your existing equity as a down payment for your next house. Now, do me a huge favor. If you like this video, make sure to hit that like button. And if you're not already subscribed to the channel, make sure to subscribe so you get more videos like this. All right, so I've been doing this for over 20 years. I've seen all the different scenarios come across. And one of the things that I think there's a lot of confusion around at the consumer level is basically like, how do I tap into my existing equity so that I can buy my next house? Because there's a lot of disadvantages to needing your current home to sell in order for you to be able to buy your next house. A lot of sellers, they view contingent offers as inferior to somebody that's coming in. They don't need to sell their house first. They're not contingent on that sale, and their offer is usually going to be picked over yours. So this comes up a lot when getting people pre-approved to buy their next house. So let's break down the various ways that you can utilize your existing home equity, and I'll tell you how to get it done as well. But part of the equation really is going to depend on what your plans are for your departing residence. Are you going to sell it after you buy your next house, or are you going to rent the property out and, hold on to it? If it's the latter, if you're going to hold on to that property, then the type of financing that you choose to basically bridge your gap of equity, so you got that equity to make your next down payment, it's going to be much more important because over the long run, that's going to impact you more financially. You're going to have to pay on that loan on the long run versus, if this is a bridge loan essentially, and you're only going to have the money lent out for a few months, no big deal. It's not as important. So let's say that you're not going to be keeping your next property. Okay, there's a couple of ways to go about this, but basically the two primary ways to tap into your home equity, which is to use what's called a bridge loan, and then the alternative would be to get what is called a home equity line of credit and basically use it as if it's a bridge loan. The pros and cons between a bridge loan and a home equity line of credit is basically a bridge loan, it's going to be much more expensive. It's a private loan. Usually the lender is providing the financing themselves, or there's some sort of private third-party provider for those funds. And because it's a short-term loan, literally you're going to have that thing for 1, 2, 3, 4, maybe like 6 months max. They're going to charge you several points, basically 1% of whatever you're borrowing up front as a fee just to tap into that money. And so you're also going to pay a high interest rate on those bridge loans as well. So your cost of servicing that debt over the next few months while you're basically trying to sell your property, it's going to be more expensive, okay? So why would somebody pick a bridge loan? Basically, if they're talking to a lender who does not have access to other options, they're probably going to get sold a bridge loan, when in fact, that's usually not the best solution. Maybe it's done faster, but I would argue against that. It's going to take just as long to get a HELOC, in my opinion. Let's shift gears, all right? Let's say you're not going to do the bridge loan and you get a home equity line of credit. That's basically a second mortgage, so you don't have to mess with your existing first mortgage, which you probably have like a 2 or 3 something percent rate on. You don't have to mess with that. You do the home equity line of credit, and you basically get approved for a credit line of X amount of dollars, whatever you need essentially to basically bridge that gap to have your down payment for the next property. So you use those HELOC funds as your down payment, okay? Now the nice thing here is that you're not gonna pay any points, you don't pay a bunch of fees to get these bridge loans, and you're probably gonna have a more attractive interest rate while you're servicing that debt. The only downside of doing this is that you're gonna have to be able to qualify for both payments, but you're gonna need that if you do the bridge loan anyway. So it's kind of like the lesser of two evils, in my opinion, between needing a bridge loan and a home equity line of credit. The HELOC, I'd take that all day long, any day, just because it's going to be a much cheaper financing vehicle than the other. But keep in mind that when you're applying for your next loan, that purchase loan, you got to include not only the existing mortgage that you've got on your departing residence, but this new home equity line of credit, or if it was a bridge loan, you'd have to be able to qualify to have that as well. So you got more payments that you got to squeeze into your debt to income ratio. But basically you would either obtain the bridge loan, which again, I'm not a huge fan of, or you get a home equity line of credit. You do that ahead of time. You get that approved ahead of time so that you've got those funds available, ready to pounce so that you can complete your purchase transaction when you're ready. Now, let's say that you're going to keep the property that you're departing. You're going to turn it into a rental property. That's great, but you're going to turn it into a rental property, but you need to tap into some of that existing equity in order to be able to make the down payment on your next property. Okay, so since you are going to be maintaining this property over a long-term period, you're holding that debt for a long-term period, this is where you're going to want to consider whether or not a cash out refinance on your first mortgage is going to make sense. Obviously, if you've got a ridiculously low interest rate on your first mortgage and you're not going to be consolidating a bunch of debt or something like that, it's probably still going to make more sense to get a home equity line of credit or a second mortgage so that you've got the funds available for your down payment. But let's say that you've got a ton of equity, but you also have a bunch of high interest debt. And ideally, like in a perfect world, you'd eliminate that high interest debt and you would tap into that equity so that you can make your next purchase. In that scenario, most likely it's going to make more sense to refinance your existing first mortgage, even if you've got a 2-something% rate, because you're going to be eliminating a bunch of high interest debt, and overall your monthly cash flow is going to increase because you're going to have less going out versus coming in. Now, whether you do a bridge loan, a home equity line of credit, whether you sell the property or you keep it afterwards, you're going to want to get this figured out and handled ahead of time. Don't go out and find the house that you want to buy and then figure out, okay, where's the down payment going to come from? You're most likely going to miss out on your opportunity because you've got an added layer of the process. You got another thing that needs to be accomplished in order for you to be able to complete your purchase transaction. So definitely reach out to us if you got questions. We do all sorts of types of financing. We can walk you through your various options, show you what's going to make the most sense for what you're trying to get accomplished. But I'd encourage you, do that ahead of time. Don't wait until you found that property that you want to buy, because you got to be ready to pounce in this market because there's still extremely tight inventory. So I hope this has answered your questions about how to access your existing home equity to buy your next property. If you've got questions, do me a huge favor, put them in the comments below. I'd love to answer them. Thanks for watching this video, and before you leave, make sure to hit that like button and subscribe to the channel so you get more content like this, and I'll see you on the next one.